African currency performance, according to the International Monetary Fund, IMF, says sub-Saharan Africa currencies have plunged 8% in 1 year amid soaring public debt and global uncertainties. African currencies are crashing to a record low, with some becoming almost worthless. Matt Kindiga, practice leader, Sub-Saharan Africa Frontier View, joins me to take a look at some of the most prominent currencies like the Kenyan shilling, South African rand, and Nigerian naira, all sitting at a record low. Matt, good afternoon. It's good to have you. What has been the cause of weaknesses for these currencies across the Sub-Saharan region?
Hi, well, thanks for having me on the program today. Yeah, certainly. So, as you mentioned, lots of downward pressure on currencies recently, and major economies, Kenya, South Africa, Nigeria in particular, seeing their currencies hit record lows against the dollar and other major currencies in recent weeks. So a combination of global and domestic factors, unfortunately, for currencies in the region. Globally, as you mentioned, a lot of economic uncertainty. We are also seeing the effects of very tight monetary policy in the US, the Eurozone, the UK, for example. Our view here at Frontier View is that, this is what's driving a lot of downward pressure on emerging market currencies, and countries like currencies like the rand in particular are very exposed to swings in sentiment driven by much tighter interest rate policy. So certainly that's one of the major drivers. But we're also seeing, investor concerns around debt dynamics in the region. So South Africa, Kenya, and Nigeria all dealing with debt pressures of their own. Investors are concerned around government's abilities to service debts. And also, additionally, individual countries are facing particular problems. So, for example, South Africa's relationship with Russia is creating some anxieties for investors in that country. It has contributed to the country's the rand's recent low against the dollar. In Kenya, the country is dealing with a very severe drought and also some fiscal pressures. And in Nigeria's case, there is some uncertainty around what economic policy looks like under Mr. Tinubu, who will be sworn in soon. So a number of global and domestic factors contributing to downward pressure on these currencies.
Now, you did mention some of those things, and we know that inflation is one of the factors that's contributing to this depreciation. And in fact, the depreciation is stoking inflation further. And these challenges, they can be hard to deal with. The IMF did make note that even though the inflationary pressures are there, they do not come down so easily, even if we see an appreciation of these currencies against the dollar. So what would you say is the problem, the outlook for the region's major currencies, including the rand and the shilling?
Yeah, certainly. So, you mentioned inflation is a big problem there, and it doesn't come down very quickly. And unfortunately, our outlook for both the rand and the shilling in particular is more depreciation to come. We would expect the rand to reach new record lows, certainly over the next 6 months or so. Our view is that the rand, which is currently trading at about 19.5 per dollar, to end the year closer to 21 per dollar, maybe even a bit further. And that's on a base case, assuming that the country's standing globally doesn't deteriorate, assuming that there is no revelation around the sale of arms by South Africa to Russia. But there is a very realistic and highly likely downside scenario that could emerge where it becomes evident that South Africa is selling arms to Russia. And there's also another risk that if South Africa has a very chaotic or fragile coalition that is elected in May next year, then the rand could lose even more value. So values of way beyond 25 per dollar are possible, although not our base case. In the shilling's case in Kenya, we are expecting to see the currency exceed 150 per dollar by the end of this year, possibly even more. At the moment, the Central Bank of Kenya is allowing a pretty stable but continued rate of depreciation. The currency is still overvalued in our view, so further record lows to be reached over the next few months.
We do know that many of these African countries, the countries you mentioned, are heavily indebted. They have lots of debt to pay off, and high interest rates are looming around them. How do you think they're going to cope with this? What's your view? What are your thoughts?
So yes, when we look at a policy perspective, we are certainly expecting more interest rate hikes. So the South African Reserve Bank, although a few months ago said it was at the end of its interest rate tightening or hiking cycle, we now expect it to resume interest rate hikes. And this is because the rand will lose enough value to justify interventions. We are also expecting the Central Bank of Kenya, the Nigerian Central Bank as well, also across the region, central banks will have to raise interest rates in order to stabilize currencies. However, the fact that we are going to see relatively high commodity prices, for example, oil prices will remain relatively elevated. We are expecting commodities like coal, iron ore, for example, and many metals to remain quite high over the course of the rest of this year and next year. That could provide some reprieve for countries that export these commodities because it will support forex inflows into markets. Having said that, overwhelmingly, there is downward pressure on currencies for the foreseeable future. So interventions into with interest rate hikes will be necessary by central banks, but also, as we've talked about, fiscal pressures. Governments will need to demonstrate to investors that they are serious about stabilizing public finances. So, for example, in Kenya, we fully expect the government to introduce more restrictive or severe austerity measures over the coming months to stabilize public finances and convince investors that the Kenyan shilling is a good bet in the future.
And so how are businesses coping with this volatility?
Yeah, this is top of mind for our clients at the moment. So most of our multinational clients are very invested in the region, and currency volatility does disrupt them. It causes planning headaches. So what we are seeing is a lot of our clients becoming much more agile when it comes to setting plans and goals for the region. So, for example, reviewing their pricing strategies a bit more frequently, focusing on their more resilient customer segments. They're also kind of reassessing their risk exposure to some of the most difficult markets. So in extreme situations, companies are scaling down investments. But in most cases, we're seeing companies change the way that they operate in the market. So whereas they may have had a direct presence, they may shift to a slightly more indirect presence to reduce the risk, but they're still really committed to most of the markets here. They're also having to sort of do things like hedge their currencies a bit further ahead, thinking about ensuring their receivables as well where possible. So there's no single solution to dealing with currency depreciation, but there are a number of things that companies can do to sort of weather the storm over the next 6 months or so.
Thanks so much, Matt Kindiga. It's always good to have your insights on the program. Matt Kindiga is practice leader, Sub-Saharan Africa Frontier View. Thank you so much for your time.
Thanks for having me on the show today.